Well, I am because short-term noise does not obviate a long-term strategy, right? The company, if you think about it, $5.5 billion charge that they took, which of course sent things just right over the edge last night in overnight markets and again today, is less than, if I've got the math right, it's right around 4.2% of fiscal 2025 revenue. That's a rounding error in the scheme of things for a company that's got an 80+% market share that is still selling every chip they make with regard to the next gen stuff they're working on. And one-time accounting charges are a blip on the radar. Companies take them proactively, they take them aggressively, particularly when they know they've got more growth because they want to get that stuff out of the way.
So Nvidia's down about 40% from its peak earlier on this year. Buy the dips?
Well, again, you've got to do it carefully. Maybe you got to slow it down a little bit because the geopolitical situation is obviously highly fluid. It's uncertain. I submit 5 to 10 year horizon. Anybody who doesn't own Nvidia would be doing themselves a tremendous disservice.
Well, let's talk about other Mag 7 stocks. Reading your notes this week, you're bullish on Apple, but less so on Google. What's the different play there?
Well, that's an interesting distinction, right? Because one of the things you and I have talked about in the past is that not all big tech is the same. So you can't paint it with the same brush, which is what people try to do all the time. Apple is very much the ecosphere. You're talking about maybe 2 out of 5 people on the planet accessing some form of AI through an Apple device. 2.5 billion devices already installed, multiple millions in the subscription network. They can boost their top and bottom lines by changing a few lines of code. It's a part of your life. Google is a one-trick pony. It's facing tremendous headwinds. We saw 2 just now. We saw a multi-billion-dollar fine out of the UK for predatory advertising practices, overcharging consumers. Japan's FTC just issued a cease and desist order to the company. There's all kinds of other legal headwinds. So I'm not convinced that AI isn't going to completely unseat Google. And furthermore, the last straw really is that everything Google's doing with regard to AI or search seems to be me too. They were caught flat-footed with ChatGPT and they don't seem to have recovered from that. So I'm keen to stay away from it, even as I go to the other Mag 7s.
Let's leave the Mag 7 for a while. Let's talk about Pfizer, the drug company. Again, you're a long-time bull. Not been a great week for Pfizer. They had a weight loss drug that they were very excited about, but they've canned it because various medical reasons. Shares were down, but you say you're sticking with Pfizer.
Well, I am. I'm not necessarily bullish as much as I'm holdish, if that makes sense. I wish they'd get a different CEO who I think would be more aggressive. I think there's tremendous amount of value that is untapped in that company. 30 to 40 drugs in the pipeline that have tremendous efficiency, have tremendous potential. The concern for me now is, dividend risk as this continues to roll around. I don't think that's there, but I'm concerned about it. I'm watching it carefully, and I still like the potential, even as much as I hate every minute of the way the stock's trading right now.
More broadly, the macro situation in the United States, people are concerned about debt, the bond market. Everyone was talking about that last week. How are you reading that?
Well, that's a much more intricate situation. It's high finance. It's something that most investors, their eyeballs are going to roll in the back of their head if you start thinking about it. But I think what's happening, having done this a long time, I think China is weaponizing its treasury holdings. They are selling that, and you can see that because they're going into German bonds, they're going into some of the other things, and some of that cash is returning to China. Those things bucked the trade with regard to treasuries. So very, very sophisticated stuff, but it does have an impact on treasuries. And U.S. consumer is going to get pinched a little bit because the cost for auto loans, credit cards, mortgages, those things are going to go up as this ripples through the interest rate market. So the jury's still out, but it's been a complicated situation. I think it's one of those moments where you just want to sort of take a deep breath and watch because there's stuff you can control and stuff you can't control.
Yeah, we saw United Airlines come out overnight, the unprecedented step of giving 2 forecasts. They said, we just don't know. We've got a bull forecast and we've got a bear forecast, and who knows?
Well, and the interesting thing about that, right, is this is like forecasting the weather. On one hand, it could rain. On the other hand, it could be sunny, And so the CEOs, this is where you're really going to see some interesting moves here because the CEOs, regardless of industry, that have a firm command of their business, on their potential, on their product set, and have the margins to protect, I think are going to be very definitive. The idea that there's 2 forecasts tells me that United really isn't in that camp. They're like many of the airlines. They're margin starved. They've got rising costs. They maybe haven't hedged properly to deal with this, which is why they have 2 forecasts. But the complete unknown here is still the consumer, which is in the United States markets anyway, very, very strapped at the moment.
Final word, thematically, what's your advice to investors? And you do have clients out here in the Middle East and the UAE. What's your advice to them at the moment when they say, Keith, tariffs, what's going on? What should I do?
Well, there's sort of two bits of advice, right? None of which are particularly palatable, because it's human nature to want to go very short term and, oh my goodness, this is immediate, right? But the reality of the situation is that we've been with some form of tariffs for 1,000+ years of recorded human history. And you can go back to the British Navigational Acts of 1571, Morel tariffs of 1861, Meiji 19th century Japan. You can go to Germany for the same thing, even into early America. But every country sooner or later has had this at pivotal moments in their national history. Whether that's a good thing or not, I'm not smart enough to figure that out. So the advice is simple. This too shall pass. It may not be exactly the way we want it. It may be tough to get through, but it does pass. And history is absolutely clear on that. So the question that I leave people with is focus on the companies that can get through. Think about what can go right, not all the stuff that might go wrong.